Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, last week, I did finish the week with 22 wins and 2 losses for a win rate of 91.67%. Definitely pleased about that. I had a great week. I think one of the losses I took, I probably could have avoided, but it is what it is. Anytime I can get over 85% for the week, month, year, whatever, it's definitely good. So I do try to get over 85%. Sometimes I can do it, sometimes I can't. Depends on a lot of factors, but regardless, 22 wins, 2 losses is pretty good. So now on the Trade It Is room on Monday the 13th, I said, let's see, SPY calls over 409.50. Okay, but got Friday up. Now, as you can see, we had a nice little sitting triangle right here on Friday. Gap down a little bit on Sunday. Then it started to get back up to Friday's highs. Rejected, popped up again, dropped. Had a nice little morning momentum going on right here. About right around 7:30, it started pulling back. So I was thinking, okay, I pull back and retested Friday's high. It bounced from there. We could end up seeing a nice move off from the 409.50 area. So waiting for the 10-minute candle to form, which I did. Green candle. I was looking at calls anyways. So I took calls. I took the SPX 4110 calls at 940 rate on the next higher day. As soon as it broke, get this up higher. As soon as it broke over this 409.12 area, that's where I grabbed the 4110 calls at 860, and then went from 860 to $11, and it pulled back right here. Then I grabbed calls again at 1020, which is right here for the FU candle. If you don't know what the FU candle is, I made a video in the video lessons about it. So nice little raging run right here. The red doji candle, setting up for the FU candle, and I took calls over the 40-10-50 area, which is I took the 4120 calls at 850, and they went from 850 to 1490 in that pop. Then I grabbed calls again at 1143, which is right here. As you can see, it rejected here, had a nice little tail candle. Inside candle, it tried to break out. It did a fake out, came back down. It dropped. It looked like it was going to dump, and it was a fake. And when it came back up and broke over the 4170 area, I mean, you could have got it over the wicks, but we had all these candles were leveling out right here. As you can see, the body of this candle, the body of this candle, and the wick of this candle, they all lined up pretty good. So that was a good area to grab calls right over the 4411.75 area. So I grabbed the 4130 calls at 890, and they went from 890 to 1090 in that push right there. So that ended up being a good play. Then I took puts at 1 o'clock, which is right here. Got this big green candle. Red candle, it didn't break high day. It tried to break high day, got rejected. It broke high day right here. It was a fake out, came back under, and when it broke underneath this 412 area, this is where I grabbed puts right here. I grabbed the 4130 puts at $8, and they went from $8 to $930 right there. So that ended up being a nice little play. Then I took puts at 341, which is right 341 right here. I waited for the last 341 20 minutes. So we got near the higher day right in here. This is where I grabbed it, and you can see this long wick right here. It dumped right there, then it got quickly bought back up. But this is why you need to take the plays when you're up $1 or $2. You need to take it. This the kind of market you just need to scalp and just take the small wins and base hits. You cannot hold and hope for home runs. You will lose 95% of your trades just trying to hold for that big home run. It's not worth it. You're going to just not do well. You're going to fail. So you're going to take the base hits and take your money and run, because that's just the way the market is doing right now. So when it dropped right there, I sold it. I had the 4140 puts at 550, and they went from 550 to 1090. They went almost 100% in that drop right there. So, I mean, if you're up $2 or $3 and you're not taking it, then that's on you. You need to rethink your strategy and really rethink about that, because if you're taking, look at the average person. I mean, they don't make $1,000 a day. You get 10 contracts and you're up $1. That's $1,000 a day, and you can just disappear just off that one play a day. But people, what they do is they get too greedy. They hope they have too much like unrealistic expectations, where they try to make 20 grand or 50 grand in a day. Just that's how you over not overthink, but you just have unrealistic gains, and you just end up over trading and doing stupid stuff instead of just taking base hits and stuff like that. People, they just try to become a millionaire overnight. It doesn't happen, and it won't happen. And then those that do end up doing something illegal, and they end up in jail. So you just need to focus on base hits, and just look at what the average person is making today. I mean, $1,000, $2,000 a day. Most average people are not making that. So, so if you can walk away with a couple grand a day, that's that's good. More than a lot of people. So now Tuesday, trade ideas room on Tuesday, I said SPY puts under 411. We had news drop this day. I don't remember what it was. I'd have to look at the week. What was on the 11th, the 14th? I mean, CPI. That's what it was. I had to look it up. CPI numbers dropped, popped, and it finally dropped. So I took calls at open. Actually not open, after the first 10-minute candle. Well, what happens is whenever we have these news catalyst moves where it drops quite a bit during the news event, that what ends up happening is that it just everyone gets, because it dropped, everyone's jumping in at puts at open. And when everyone's piling into puts because of the drop, it just ends up popping and shaking them out. That's just the way it happens. It doesn't happen every single time. Nothing is 100%. There is no magic strategy, no magic indicator. Nothing is ever 100%. But this is a pretty strong strategy when it gaps down quite a bit, or gaps up, especially if it gaps up, and people pile in calls when it opens and it ends up selling off. But that's just how it is. Everyone's just jumping in on that one side, and they get squeezed out of it. So that's what ended up happening, and that's what I was looking at. So I said puts under 411. So I had 411 for puts, but I just I don't know. I don't even know why I even put 411, because it was already at 411. What time did I post that? 9:24. Yeah, see, it was already down here. I probably shouldn't even put 411, but sometimes, if you did take the 411, it would have paid off and done good. But me, I always wait for the first 10-minute candle to form. I don't like trading the first 10-minute candle. But if you did grab puts for under 411 on the first 10-minute candle, you would have done fine. But me, I wait for the first 10-minute candle to form. Everyone was getting on the put side. As you can see, it got bought up really quickly, and I switched to calls. That's when I was focusing more on calls over the higher day, which is the 411.50 area. That's where I grabbed the 41.50 calls at 760, and they went from 760 to 1010 right there. So nice little play right there, pullback right there, but definitely did well. But anytime you see this, usually it does end up going the opposite direction, but you never know. It can end up flushing more. So yeah, and I think that the CPI numbers were really bad. I think that's why I ended up taking that's why I ended up looking at puts right here at open, because it came in hot. Yeah, that's why I put in the thing, the trade ideas room. Sorry, I can't speak. 411 puts because it came in really, really hot. And that should have actually, honestly, it should have really sunk the market down to 405, even 400, because it came in at like 6.4%, which is not good. But the market didn't care. It rebounded. Everyone got in on puts, and it just squeezed them out. So we did get the right side of that play. Then I took puts at what, 1050, which is what? Right here. I took it right here. 1050. Yeah. I don't know why, but I took it right here. I probably should have taken it right here. But we had a nice little doji candle, big red candle, and then flushing more. We had a big dump right here. I don't remember what that was. I think maybe SPY just realizing it's not good. I don't know. CPI numbers were not that good. Then you put in this big green candle right here, which is a hammer. For some reason, I bought the pullback when it dropped to low day and it rebounded. I grabbed the rebound right here. Not quite sure why I would have done that right there, but it didn't meet lower day. But when it did get below the 40 area, I think this is where I ended up grabbing it right here, if I remember correctly. The 410.50. That's where I grabbed the 4100 puts at 870, and they went to 1220 on that dump right there. So not much. Then I got bought back up again. Then I switched to calls. At what time? 1202. Oh, right here. I get why I grabbed it here. Popped up, rejected, came back down. It popped up to VWAP 20 EMA, with 20 EMA is the blue line. VWAP is the dash line, and it rejected harshly, came back down, got below lower day, got bought a little bit, and it made a nice green candle here. Then it made a nice green candle here. Then once it got over this this 409, you can even say 410 area. Because you get this candle here and the inside candle and inside candle. So whenever I see these inside candles from each other, I do like playing off them. That's why when I see these big candles and I see a few inside candles like this right here, I will play off from those. And especially after big moves, I like seeing those, and they make it easy to play off from than chase. I mean, I could have played right off from, because they were getting bought right here, I could have played calls right over the 411 area and got that bump, that play right there. I mean, because these are nice two candles right here, a hammer, then you get another hammer right here, which is inside candle. I definitely could have played off that, but I didn't. But definitely could have. But here I did get the inside candle. When you got the over the 410 area, I grabbed the 41.15 calls at $9, and they went from $9 to $11.80. So that was a nice little play there. Then I took puts at 144. Which is right here. No, right here. Same thing. Got this big green candle, this other candle, inside candle, and I played off the low right here, the 412.40 area. This is what I like to see, especially after big moves. You've seen these few candles in a row, inside candles side by side. They definitely make it easier to play off from. I mean, I could have taken calls over the bodies over a 4. Probably would have rounded up to 413, but didn't break that. And when it broke below the the 412.40 area, that's where I grabbed the puts. I grabbed the 41.30 puts at 890, and they went from 890 to 13.40 in that dump right there. So that ended up playing out. I do like seeing these inside candles after a strong move or a strong candle. They definitely make it easier to play off from. So definitely was happy about that. Then on Wednesday, trade ideas room, I said SPY puts under 410, which is right here. It didn't green candle. Actually, before I get into that, I held SPY puts overnight. I grabbed SPY puts at 407 right here after market. You can grab SPY options after market close, but it's going to be before 4:15. That's when they shut it off. We had this big red candle right here, and I decided, okay, I'm just going to grab it and hold it overnight, because I think we had, what do we have Wednesday morning? Retail sales. Yeah, they came in hot. So the market ended up dropping. So I grabbed the 412 puts for 215 because this is Valentine's Day, 214. So I grabbed the next day 412 puts, and it came in at 4010. So I had them at $1.71 and then went to 266. So I sold them right at open. So I'm glad I did. First 10-minute candle formed. Once I get over higher day, that's where I grabbed calls. I grabbed the 4130 calls at 850, and they went from 850 to 970. That little play right there. See, $1.20 move. You got to take the dollar plus move, especially. This crap has been happening a lot lately at open, where it will pop faked and a fake drop and a fake pop. I mean, this has been the normal for the last few weeks, quite a few times, at least 60-70% of the times. The first half an hour has been this mess right here, so got to be very, very careful with that. And I actually played both sides of that, it looks like. Yeah, I caught the calls right here. Then when it came back below the below the 410.40 area, that's where I grabbed the 4100 puts at 760, and they went from 760 to 1060. I mean, if you're not up, if you're up almost $3, you're not taking it, you need to really rethink what you're doing. So focus on base hits. Then I took calls at 1031, which is right here. I can see why I took it here. I got over the 411.50 area, breaking new higher day. That's why I grabbed it. I grabbed the 4130 calls at 750. Went from 750 to 860, $1 plus move. Get to take it. So this is just not letting you get much out of it. It's trying to figure out which direction it wants to go. It wants to pop. It slams. No, rejects. We're going to dump. No, rejects. I mean, now it gets bought up. Fake out. And then it finally pops. So I didn't play any of this at all. I don't know why. I don't know why. I didn't really play anything right in here. I think I was definitely playing the IRAs, so that's why you need to. If you're not a premium subscriber, the IRAs alone are worth it because they're actually small accounts that I grew from $500, and I've got 3 of them going, so definitely should be paying attention to that. So I grabbed calls, the last play of the day. I've been capping my plays for 5 plays. I'm not doing any more than 5 plays in my main account a day. I don't care if the wins or losses. Well, I mean, if I take 2 losses, I'm probably gonna try to get another win in just for good measure to try to get out of a red day. But I've been capping my main plays at 5 and playing the extra ones in the IRAs because I need to get the IRAs up. So, okay, so I grabbed calls at 331, which is right here. See, it broke out, tried to break out right here, fake out, try to break out again, fake out, dumps back down to 20 EMA, pops back up, dumps again, then it comes back up. And once it got over the 413.25 area, that's where I grabbed calls. Actually, I grabbed them right here. I grabbed them in this candle. No, this candle. Yeah, this candle right here. And I grabbed the 4135 calls at 570, and they went from 570 to 850 in that pop right there. So that definitely was a good play. Actually, I think I grabbed it in this candle right here. Yeah, I grabbed it in this one. Then it dumped, it popped, and it dumped, and it finally popped and let go. Yeah, so from 570 to 850. So that was a good end of the day play. Then on Thursday, I kind of struggled a little bit. Traded his room. Okay, what was the news on Thursday? I think it was CPI, PPI. Yep, that came in hot too. PPI. Let's see, traded his room on Thursday. SPY calls over 410. This is where I was looking at. Went from 415 to dump, and people are gonna jump in calls right away because you get that massive dumps right here. Everyone's going to be in the put side. I say calls, I meant puts. It dumped on the PPI numbers. Everyone's going to jump in puts at open. That's why I was thinking, okay, we're gonna pop. So I waited for the first 10-minute candle to form. Then I grabbed calls right here, the 4120 calls at 940, right when it popped up, and it ended up being dropping, ended up being a fake out. I ended up holding it, thinking, we're going to end up squeezing. Everyone is just in puts. and they're going to squeeze them out. So when it faked out, came back down, I added at 10.10, which is right up here. When it came back up, I added more at 6.60 because I initially had the I initially had it at 7.60 when I first bought it right here. Then it dropped back down and came back up. That's when I ended up adding at 6.60, making my new average 7.10 because I was confident it was going to pop, and then it finally did. So so they went from 7.10 to 11.80 in that push up. Then I took calls again at 11, which is right here. You get the FU candle right here after a strong move, red candle, got the new high a day. Grabbed the 41.30 calls at 7.60, and they went from 7.60 to 8.60, ended up being a fake out, so I got $1 play out of that. Then I bought puts at 11.10, no, at 11 a.m., which is right here. So it fakes a fake breakout. Then when it came back down, that's where I bought puts. I bought the 41.10 puts at 7.70. Then it just chopped around. Then I ended up adding more at 11.59, which is right here. Right here, it just chopped around, tried to break out, faked out. When it came back down, I added more at 4.90, make my average 6.30, and then it just popped, and I ended up stopping out at like 2.20. So didn't work out. I mean, I really thought we were going to dump right here because it just looked like we were. Of course, it just popped more. Then I took calls at 2.05. 2.05. Right here, looking at the wrong time. Right here, you can see it, higher days right here, pull back, came back up to higher day. This is where I grabbed it. I grabbed the 41.30 calls at $8, and they went from $8 to 10.50, and that little pop right there made. I grabbed the over the bodies of this candle instead of the wick. Definitely made more sense after it dropped. I didn't want to wait to get it up here. I wanted to get it over the bodies of the candle. Sometimes I play the body, sometimes I play the wick. It depends on what the wick looks like, the body looks like, and how far I pull back and stuff like that. But this particular reason, I liked it when it pulled back. So I liked the bodies when it did pull back, came back up to that. That's where I grabbed the calls. So they went from 8 to 10.50 in that little push right there. Then I grabbed puts at 3.06, which is right here. It dumped on news. I chased it. I remember chasing it down here. Then it pulled back. So I initially had the 41.20 puts at let's see, 7.50. I chased it like crazy because I remember this. I chased it, then it pulled back, retraced quite a bit. So that's when I added more at $5, taking the risk, making my new average 6.25. Then it finally dumped. So they went from 6.25 to $17. So 100% plus move on that. So stayed right underneath the lower day. Got bought up at lower day. So that was a nice little play. Definitely could have gone against me. So this play, I would have taken it again. That loss that I took here, I would have taken it again. It just is a bad play. It just didn't work out. So like I said, nothing is ever 100%. And then on Friday, let's see, SPY calls over 407, which is right here. I rounded up. Why did I take it? Why did I have 407? Let me see. Let me back it out a little more. 407, which is right here in this pivot, right in here. So we have the choppy day, red candle, and I brought puts at the lower day. I got the 440 puts at 780, and they went from 780 to 1170 right there. You get this massive wick right here. It started to push up, this red candle right here. It tried to break higher day, then it came back down, was looking weak. And definitely looked like if it was going to get below this 405.50 area, it was going to get kind of ugly for a minute there. So when it put in the red candle, I think I had both sides loaded. I had calls, inputs ready for both sides, and when it dropped, I grabbed puts right here. So they went from 780 to 1170 on that push right there, the 440 put. So definitely got a good play out of that. And then I took calls at 1012, which is right here. The push through VWAP. It dropped down, got this nice green candle, got right over the 405.80 area. So I grabbed the calls. I grabbed the 40.80 calls at 830. Went from 830 to 1150 and that push up right there. And then I took calls again at 117, which is right over here. 117. Right here. I grabbed it right here. Right in here. I think the push through VWAP, that's where I grabbed it. I grabbed the 40.65 calls at 720. It pulled back a little bit, then it ended up popping. So they did go from $7.20 to $8 right here to here. So they end up working out, panning out. It stayed over the 405.50 area. Just anytime it got below 404.50, it just got bought up. Right here, got bought. So I wasn't worried about that. If it broke 404, then I would have cut it, but it didn't. It stayed up here. Then I took end of the day calls at 336. This is one I probably shouldn't have. 336. Yeah, I would have done this again. I definitely see why I took it here. End of the day on Friday, it pulled back a little bit, came back to high day. It definitely looked like it had potential to squeeze. I don't know if there was a candle set up right here. Little, I guess you could say it's small inverted handle, inverted cup and handle, inverted head and shoulders, the left shoulder, the head, and a right shoulder right here. But neckline would have been like right there or something. But dropped down, came back up. I thought for sure if it got over higher day right here, we could have seen a push to 410. There's definitely a push to green. Go green for the day, possibly even green for the week. I think it needed like 409.50 plus to go green for the week. And I thought for sure, grabbing calls, I grabbed the 40.80 calls at 450, that we got over a higher day, we were going to go green at least, maybe even green on the week, and test this trend line up here, have a strong end of the day candle. But once it got to higher day and I got in, it just dumped and it just chopped. So ended up being a loss. So it is what it is. So that's going to do it for the recap. I hope this has helped, and thanks for watching.